Hello, I'm Nadine Blaney, and welcome to this week's edition of Media Week. Ahead on the program, management changes at Foxtel and talk Telstra could sell its stake in the subscription TV service. We'll bring you all of the latest ahead. And a legendary photographer takes the reins at Vogue this month. We'll find out what's in the feature and what he's decided to show us about Sydney. We'll have more on those stories a little later on with our co-host James Manning. He, of course, is editor and publisher of Media Week, and he's joining us in the studio as usual. But first, as falling ad revenues hurt some traditional media players, other sectors are reaping the reward of the digital revolution in advertising. The outdoor advertising sector is seeing strong growth here in Australia, underpinned by the move to digital billboards. But can it be sustained, and where will the next big leg up come from? For more, James and I are being joined by APN Outdoor CEO Richard Herring in studio. Richard, thank you. Good to see you. The share price is trading up around 52-week highs. Momentum certainly does seem to be at your back. Now, is this a case of a rising tide lifting all boats, or perhaps tell me why it isn't?
Yeah, look, I think certainly last year was a spectacular year for outdoor, and as you said before, the digital outdoor has certainly benefited that. But I think that, we are certainly performing better than the market at the moment, but we have to strive very hard to do that. But the markets are very strong and seem to be continuing into this year as well, so it looks good at this stage.
Richard, I think you went on a bit of a roadshow after the results. You talked to, investors and analysts.
Yeah.
What sort of questions did they have for you? Were there sort of topics that were sort of uppermost on their mind?
Yeah, look, I think probably less around the results because they're obviously very good. Probably more about the sustainability of the business and the industry and those results. So I think that we try and keep the messaging pretty simple in those terms, and everyone does seem to want to jump to the digital story pretty quickly because it is, it's new and it's exciting. But I do take a bit of time to make sure people understand another really interesting driver, which is that of our audiences. That our audiences are increasing every day because of further traffic problems that we have out in the roads and more people travelling. And the counter to that is that obviously the challenging or the difficulties that other media are having in sustaining their audiences. So that sort of relative growth we're getting, certainly, I think TV's been challenged over the last year with the streaming services that have seemed to have been launched to great success, and that's only given us a big leg up. So that audience story is really profound in our industry and certainly our business. Added to that is the digital story, which is pretty well played out, as in people know of it. Mm-hmm. But I think those things combined, and if you think about them, they're both quite sustainable drivers too. So it's not like it's sort of the end of the road and nothing more is going to occur. So there's, that was the main questioning, I think. Yeah,
so if you're guiding for that 15 to 20% earnings growth in the coming year, I mean, how do you continue to increase your market share?
Yeah, well, look,
specifically.
It's about market share, but it's also about growing with the market, the tide as well. So, we're anticipating that the markets in Australia and New Zealand will increase for us around 8 to 10, 11%. So if we increase by that sort of amount of revenue, top line, then we will get those sorts of EBITDA results at the bottom line.
And margins also increasing as well. Do you think that you can squeeze more out of that?
Look, I think that depends on the demand, obviously. So the margins will obviously increase the more revenue that we write over and above that. But the margins were very pleasing last year, and we don't see any slowdown of that, although there's a point at which it does obviously slow down the increase.
Zenith Optomedia are talking about like a 9% outdoor growth this year. Yeah. So are you trading, is that way too conservative, do you think? And are you trading above what the sector overall will do, do you think?
I don't think it's conservative. I think, we're sitting here in the middle of March. It's a long year. There's a lot of things to play up, elections and things like that, a lot of unknowns. And don't forget, a lot of the revenue does come at the back end of the year as well. So I don't think that that's an unreasonable prediction, and probably about where we see the market as well. So we'll obviously know more as the year progresses, but I think that's a reasonable number, yeah.
And you think probably it's good not to get bogged down on one figure? Just look, it's going to be up, hopefully double digits. And
well, I think one figure's a bit, but I think a range is good. I think, I think that the expectation, I think, from most quarters would be around about that, 8 to 10, 11%. And certainly what we've seen this year, albeit only 2 months, I think January is up 13% and Feb up 20%. So reasonably good start, or a very good start to the year to produce a result like that for the full year.
We were talking about digital. You had 9 more digital billboards added in Sydney, I believe, last year. 2 on my commute.
Thank you.
So how many, are you targeting for this year, and where would that be? I mean, are you looking at sort of outside the major centres, or is it on those, really well-travelled routes?
Yeah, look, we actually last year was an interesting year because we built 18 sites last year. A market that we were under-penetrated in was Sydney. We only had 5 at the end of 2014. So we did concentrate on the Sydney market and built 9 out of the 18 in the Sydney market. And not only built 9, but importantly where they were. So for those that know Sydney, Military Road and Epping Road, as you know, or Pacific Highway, Pimble. So a really good spread. They're on your commute.
3 on my route.
Well, there you go.
You corrected me.
I've been paying attention to 2. So it's important that we build them where we want to build them, the markets, and also in the geography of where we want them to build them. So we think that, we're saying that we'll build 20 plus this year, of which we hope to build 5 or 6 in New Zealand and the remainder in Australia. So, and plans are progressing very well to achieve that.
Issues facing the sector. I mean, it's lots of good news and digital's growing. What things do you encounter? I mean, is there much regulation around what you're allowed to do with digital on roadside in particular?
Yeah, look, there's a lot of regulation around outdoor advertising, so you can't obviously just go and build a billboard, as there is with converting and building digital signs. So it's something we spend a lot of time on, the regulatory side of the industry and our business. Because we do understand that you need to obviously participate in active discussions around these issues and get good outcomes. So we do spend a lot of time. I think it's improving our ability to communicate some of those things. But I think one of our big challenges is probably as we grow the digital signage out there is that we bring advertisers along with the story and make sure they understand what you can do with these screens now, especially now that we have large audience penetration.
What are the sort of rules about those digital images, digital moving images, for as a possible distraction for drivers? Is there what sort of you're governed by what you can and can't do there?
Yeah, absolutely, and it varies from state to state, almost council to council as well. But
is there a bit of self-regulation too? I guess
there is some self-regulation, but we'd go by the normal means, and they are around the amounts of times digital signs can change, and the amount of time that each one is actually on for before it does change.
You couldn't run video, I guess.
No, it's essentially a PowerPoint slideshow. Yeah, so apart from other environments which is not roadside, but they're essentially PowerPoints.
Richard, is there any threat of disruptive technology in your space? I mean, what sort of keeps you up at night as far as outsiders moving in?
Yeah, look, I think technology, it's a very good question, because I think most media would sit around in their boardrooms worrying about technology disrupting what they do. We've actually had a fortunate situation where we've seen how we can take advantage of technology, being the digital screens, as well as connectors to mobile devices in the outdoor arena, so beacons and things like that. So some really exciting things happen. So to be very frank, I can't see many disruptors from technology. Driverless cars is an interesting phenomenon that no doubt will occur. I don't know whether it'll be in my lifetime. I've got see my white hair.
You've got a bit to go.
But, so we're wary of those things, but there's nothing that's really apparent anyway.
All right. And also growing the business obviously comes at a cost. Are you increasing headcount in any sort of significant way? Not really, no. We add assets, and obviously with the revenue, it doesn't mean we necessarily put on pro rata headcount. We are putting in have put in a couple of really interesting roles that deal with that technology side of the business. It'll work with these environments of beacons and things to work out how we can either make it a great customer opportunity or even a data opportunity. So not big headcount increases at all.
And just what are you going to do about your name? There's 2 listed APN businesses, one solely out of home, one with a significant out of home presence. Have you thought about changing your name, rebranding? Is it a negative?
I think they should think about it. No, look, I think we have thought about it. I think APN Outdoor has got an incredibly strong brand right now. Clearly for the investors it's potentially a little confusing, but I think in our world, which is the advertiser market and the media market, we are APN. We're APN Outdoor, so that brand doesn't exist for the advertisers as such. It's the newspaper mastheads and the ARN, etc., etc. So we haven't done that. I think the only reason we do it is something substantial changed in the business that actually warranted, you know, and that isn't happening, so we're very happy with the name and we'll continue to trade under that.
Okay, and happy with the result as well. Richard, it's been a pleasure having you in. Appreciate it.
Thanks, Nadine. Thanks, James.
That's Richard Herring. He is from APN Outdoor, the CEO of that company. We have to take a short break here on Media Week. Foxtel in focus when we return. We'll talk Telstra. Could it be selling its stake? We'll have all the details. Evan Lucas from IG when we return.
Are you ready for me to blow your minds? Look at your website, now look at mine. Back at yours. Kia! Let's be honest, your website is older than leftover noodles and it's starting to stink. You need Wix.com. Shut up! Whether you're a photographer, a rockin' musician, a restaurant owner, or a dragon warrior, with Wix you can create a website that leaps right off the screen.
Go to Wix.com. Create your stunning website today. See Kung Fu Panda 3 only in theaters.
Whether you plan to paint, plant, tidy, trim, mow or blow, Mitre 10's got some awesome ideas for autumn. Like this Rockwell petrol chainsaw, just $129. Lion 3-piece ratchet set, $25. Fire up this Weber Q Barbie for only $3.95. Waterproof Eveready Dolphin torch, just $12. And this powder-coated storage cabinet, just $149. That's mighty helpful, Mitre 10.
They'll never find us here. Then this holiday could last forever. Shh, Gregory.
Find your perfect hideaway at Stays. The whole house, the whole family, a whole holiday.
Hi, I'm Michael Kadari from COSEC. I've spent my entire life creating wealth for my clients and family. And right now, interest rates are at a historic low, so it's a challenge to have your money working harder for you. That's where COSEC can help. In 2012, I tipped TPG Telecom. In 2013, I recommended Domino's Pizza. And in 2014, I picked Ramsay Healthcare. All of these greatly outperformed the stock market. That's why COSEC clients are some of the wealthiest and most successful investors. At COSEC, we have a unique stock market filtering system. And now I can share this knowledge with you, because wealth begins with better knowledge. Just go to cosec.com.au and apply to get your free report. Act now and get cutting-edge research covering some of the best opportunities.
Michael, so what stock should I buy?
When Michael Kadari talks,
well,
everyone listens.
On top of their already great odds, Ladbrokes now gives you Odds Boost. Just make your selection on any race, then press the Odds Boost button and watch your odds get even better. And best of all, it's available to every punter on any race, every day. Go, you good thing. Make already great odds even better. Get Odds Boost and bet better with Ladbrokes.
Sky News Wealth is all about money. Making it, managing it, spending it, or just dreaming about it. From the flashy to the frugal. News, tips, tricks, and more at skynews.com.au/wealth.
Hello and welcome back to Media Week. Well, big news in the subscription TV space this week with the speedy departure of Foxtel CEO Richard Freudstein. Peter Tonagh has moved quickly into his new role. Let's bring in our co-host, James Manning, editor and publisher of Media Week. Yeah, James, no time wasted, getting right to work at Foxtel.
This time on the show last week, there was a speculation he would go. I saw him outside the studios, you know, he was coming back from a meeting. Yeah, and it was announced later that day that Peter Tonagh returning to Foxtel started on Monday, so, you know, didn't waste any time getting him in. Richard's still here. There's going to be a handover period. Peter's taken over Richard's also his directorship at 10, so they've swapped that over.
And stepping down from the REA Group board, which I guess will sort of allow him to really sharpen his focus on
Correct,
Foxtel.
yeah, and I think Richard's still keeping his directorship at REA, so he's still got a connection with News Corp there.
All right, let's bring in Evan Lucas, joining us from IG in Melbourne. Evan, just to get us around another perspective, this talk of Foxtel, big questions out there. Will News Corp move to buy it in its entirety, considering there's a, you know, Telstra sort of looking like it wants to exit?
It does. This is also sort of moving into what's been happening over what we're describing as sort of the off-season, what has been a very interesting period between December and February around, obviously, the reach rules have never been this close to being changed in terms of the cycle in the media space as well, and you can see that in the market. So the Telstra move is very interesting from our point of view. They want to become a multimedia player, not just a communications company, but a multimedia, multi-channel operator. To move away from Foxtel is quite interesting because they've always wanted sports rights and the activity to sports rights. Now, there is also suggestions in the market. Telstra, if they did sell down Foxtel, would be looking at other players, and there is talk around, what happens to some of the smaller end. Do they also look at doing tie-up deals with 9 or 7, particularly 7, considering that Telstra is trying to get into the AFL market? The other side is dead right. Clearly, with Peter coming back, that makes News Corp very much a prime candidate to do a full takeover of Foxtel, and clearly we know from what Rupert Murdoch did last year that is his way forward. He clearly sees that sports rights and sports movements and sports contracts are where he wants to be, and it would make sense, considering the deals that Foxtel did with NRL and AFL last year, for him to try and make a full takeover if that does come about.
And News Corp certainly does have the cash to make such a purchase.
They do, and they've been backing that for a long time. The one thing I would say, though, it does, and we've seen this with Fairfax as well, does really put the print media side into a lot of issues. I mean, since they did the split from Fox to News about 2 and a bit years ago, it was all about having that war chest you just alluded to, Nadine, to buy assets that clearly would really grow News Corp, and that is one area. And clearly sports would be an area that they'd want to do, and that would therefore mean, do they redivert that money away that was supposed to go to print towards digital? It looks like that's a very good conclusion.
Now, Telstra's also sort of talking up, or there's been rumours out there in the market that could do a float or a partial float of the remaining stake. This would be a good thing for valuation transparency, I suppose.
It would. It also, therefore, does sort of alleviate the sort of the first part of the discussion of whether or not Telstra does want to have that exposure to multimedia. It's still given that opportunity and that right to therefore do some form of mobile data sort of transfer for sports, for entertainment in general, with a Foxtel or with another provider. So it gives them some form of minority stake. It gives them some form of negotiation and bargaining power to get involved with that, but it doesn't therefore require the capital they currently have output. They are looking at Asia as an expansion project, and maybe that is also what Andy Penn is doing, is building that war chest to continue to grow the business outside of Australia rather than in as well.
Just give us a status update quickly, because we continue to see Bruce Gordon building his stake in Nine. How has that been evolving?
It's been, well, he's now getting to a point where he's also starting to touch that reach rule sort of law in terms of how big he's been building it. And that also gets back to what I said at the start, is that the amount of what's been going on in the back rooms since December has got very, very interesting. The fact that obviously we know Nine have now taken 9.9% stake in Southern Cross. We know Bruce Gordon is building up his position in Nine, and the fact that obviously the contract between Win was basically being redone. It clearly shows you that they are all of the belief the reach rule is going to go, and there will be an absolute run to the gate in terms of trying to do these tie-up deals and actually consolidating that media space. So his movement in there clouds possibly what Nine wanted to do, which was around doing a tie-up with Southern Cross and having that ownership into the regional space. It will be very interesting to see what happens when that reach rule goes and who ends up with what and where we end up with deals.
Yeah, drama in the media space. Looks like it's shaping up to be an interesting year. Evan Lucas, thanks for joining us.
Thanks, guys.
Evan Lucas from IG in Melbourne. My guest host, James Manning, editor and publisher of Mediaweek. So just on that, the existing affiliate arrangements between 10 and Southern Cross, 9 and Win, they all expire in June. So regardless, I mean, do you think we'll hear anything on that front prior to June?
Well, they'll be hoping we get some clarity on those media rules, I guess. If we do, then we might. I mean, the Southern Cross deal with 10 could go into rollover. The 9 Win deal's already in its 6-month rollover period, so they do have some elasticity in those things. But it's interesting. This week it was raised that maybe Southern Cross could do a deal with both 9 and 10 to take their signals, which would cut Bruce Gordon right out of the picture, perhaps. So there's lots of things that could play out.
Lots of
in
moving parts. And I'm curious, what are you hearing about these reach rules, given now that it appears as if we're in election mode? If we do have a double dissolution on July 2nd, I mean, will any of those big decisions be made between now and then?
I would think possibly not.
Yeah.
You know, I think so. I think that, but I think they might have been on hold for a while anyway, because we're going through a Senate inquiry, you know. So there's still a lot of work to do on some of the members of Parliament to convince them, you know. So I think there's still a bit of work to do before these laws will get through. So, you know. Yeah, look,
watch the space. Stay tuned, as we say.
Don't hold your breath on this one.
Okay, let's talk about some of the other stuff that's out there, because Zenith Optimedia has released its global ad spend forecast. Looks like it's going to be up from last year, and mobile ad spend really driving that growth as well.
Sure, yeah. Look, they're talking about 4.6% for calendar 2016. The interesting thing is, what is Australia out of that? They're talking about a 2.8 growth for Australia, so we're lagging a lot of the international markets. That would put it on par with last year, which was about 2.9, so a very similar year to last year, this one. Driving that is digital, and as we've just talked about with Richard, out of home, you know, so digital should be up about 12%, out of home they're thinking about 9%. The radio will be up a little bit, but both big double-digit falls for both the print newspapers, print magazines. They're expecting to be down about 20% for each of those.
And in the States, it's interesting to note that the US presidential race and, of course, the Summer Olympics really playing into those figures.
Yeah, so it'll affect that big time.
It was a busy time this time last week, because we also heard about the Fairfax retrenchments.
Yeah.
Have we heard much from Greg Highwood in the wake of that?
No, look, we haven't. The really only thing, he cropped up in a very short interview on the ABC 7:30 this week. They did a bit of a look at the strike after the people went back to work. They're talking about the future of the print sector. They quoted Highwood there as saying, look, he would only guarantee the papers will be around for, I think they said 12 months or the end of this year. So I think he probably would have been talking about the weekday editions. But what he did say, look, they're very focused at maintaining quality journalism, you know, but some people think, well, it's a funny way to go around it by just continually cutting your quality journalists. But, you know, at the same time, I think, you know, they want to be to make sure they keep a few quality journalists. They've got to, you know, cut a lot of what they call the excess at the moment around them. So they can't maintain maybe the same quality, but they want to have some sort of quality.
It sounds slightly counterintuitive
it does,
to the journalists in the room, however. Let's get to some of the pretty pictures, shall we? Because Vogue Australia out with one of those landmark editions, a much anticipated Meritistino, so widely regarded as one of the, you know, the world's
great fashion,
photographers. So it's interesting that he's doing this spotlight on Sydney. It's actually his first time in the country.
Yeah, absolutely. Look, this is actually the 10th international edition of Vogue that he's edited, so he's quite used to this flying into somewhere and taking over the reins. He was only here for 3 weeks. Look, it is very Sydney focused, but I guess A, because he probably didn't have a lot of time, and B, when someone gets here, they're bedazzled by things like Bondi Beach and
how could you not be?
The sun and stuff like that. So there's a lot of Sydney in it, but I don't think that'll be a detriment. You know, there's some really interesting stuff in the edition when you get into it.
And I guess on the media front as well, when it comes to magazines, we do have a new magazine coming out from David Jones that will challenge.
Yeah, they've given their contract for their custom publishing contract to a company called Medium Rare, which is part owned by News Corp. It's a very successful little start-up at the moment. A few ex-people from Bauer Media gone into partnership with News Corp, so they've got the contract already.
And it goes up against Bauer Media's, the publication that they do for Myer as well,
Yeah, correct, yeah. So they already got the Qantas contract, they do a Coles magazine, they do the Foxtel magazine, and this DJ's one will be sort of entering that stable. So they'll be able to do some interesting cross-selling opportunities to people that buy spaces in any of those titles.
Yeah, that's interesting.
Yeah.
Okay, so that's some of the buzz around media news.
Sure.
Let's get to some of the TV ratings, shall we?
Yeah, absolutely.
For week 12, and this is free to air.
Not a lot of change there from anyone who's been watching the last few weeks. Look, My Kitchen Rules continues to dominate in this space. That was the end of I'm a Celebrity, Get Me Out of Here. That was the announcement of the winner. So I tend to be happy about that, pushing into the top 5 there. Again, like we're seeing, Sunday news bulletins are always there. Doc Martin doing great business for the ABC, continuing. If you want to have a look at subscription TV now.
Yeah, let's take a look at subscription TV. And I guess no big surprise that we see sport, leading the pack.
Yeah, look, it's still all NRL. The AFL actually starts Thursday this week, so this time next week we should start seeing those first AFL games programs filtering their way into the top of these charts. And then the non-sport programs, again, sort of similar faces we've seen the last few weeks. Selling Houses, The Real Housewives. Bit of talk this week about the Real Housewives of Sydney coming up, Nadine.
Really?
So I don't know if you put your hand up for that. But,
No. But,
so they're expanding that franchise, which is working very well.
Not knocking it, just
very
not
well
one
for
of them.
Foxtel. Okay.
Monday to Friday, girl, I am. Okay. That's it, I believe.
That's all we got time for today?
That's all we have time for. James,
Okay.
always great.
Great to see
Love
you.
having
Good to working with you again.
Yeah, good to be back. We'll speak soon.
Okay.
That's all we have time for on Media Week this week from the team here. Thanks for your company.